read this article, I don't know, it could have been 2 months ago, what Amazon was going to do out of the goodness of their heart. That sounds on surface level, sounds great. So, obviously, you and I know that Amazon has their own products that they sell on Amazon.
Yeah.
Their everyday items that they produce, they manufacture, and then a majority of it, I don't know the percentage of it, that are just third parties that have, the inventory for them. They get out real quick. Third party sellers.
They're more of a logistical arm for those third parties.
Yes. Yeah. So they're going to start lending money to their customers,
okay,
their value, because they're going to have the analytics. They know how much their products are selling. So they figured, well, who better? Because then
it's a vertical.
They're also the conduit, because when you're buying through Amazon third party, you're paying Amazon. So they have that money. So they're going to, in essence, it's factoring, so they can hold back.
Yeah.
And, on the product. So they can get their money, and they already know.
From Josh, when we were talking with Josh about Shopify being the same. They have all the analytics. They know your track record of sales. So they can lend to you on a proven, there's a proven track record there.
Do you think that's a good idea that Amazon's doing that?
Well, I mean, just hearing for the first time, I don't know how I would answer, but mostly yes, I'd say positive. I think it can obviously go in a negative direction because of their size, and there's not a lot of competition, right? So competition is healthy. One bank competing against another bank with competing rates, competing offerings is healthy. But I think when you have a behemoth that holds all the cards, then if let's say out of the gate it's healthy to their buyer, the business they're lending to, it's healthy in the sense that they're offering favorable rates, and they onboard a lot of their customers to get loans. I think that's usually how things start. They're not going to start out as a predatory lender.
But here's where I come. Who is monitoring now? If
sure
we both sell the same type of product,
we're
in competition and we sell on Amazon.
That's where I'm headed.
And you borrow for your inventory on Amazon. And now both of our products are not as popular. They're going down. Who's to say they're not going to put yours first so they get paid back?
Well, I think they have a bigger problem to solve in that, or they have a bigger problem they don't want to create. And that is they don't want to take the base of customers that they have, which are these businesses who are supporting everything because they're the ones that are bringing a lot of the products to the table. And they don't want to turn those people off to another platform.
I think it's brilliant on Amazon's part saying, no, we're going to offer credit. You can bulk up an inventory. We'll take it out of the future sales. And so it helps with their cash flow, their liquidity, and that. But, is there truly a checks and balances since they control the whole platform?
I think that's definitely something to think about from maybe a regulatory standpoint. But I'm thinking about it more of them disrupting their base, right? By getting too greedy. But now that we're talking through it, I'm thinking more about the why of why would they lend to their base? Is that a sign? Is that a signal?
Well, it could be a sign because
the fact that
production issues, and so time and getting everything over
from so maybe they're solving a problem, but it's producing a new layer of revenue for them.
Correct. But these are the things that I'm not a big fan of the current leadership of the CFPB. I think they're very nearsighted in what they believe is good for consumers. It ends up being bad for honest consumers and great for bad consumers.
Right.
And it nothing teaches people to be financially responsible whatsoever. It's saying, nope, you're a consumer. You're indemnified if something happens to you. You can just walk around being an oblivious consumer and have no responsibility whatsoever.
Right.
So, I mean, this is the type of stuff that I believe, CPBs and everything could be involved in too, to make sure to have oversight that, great, Amazon, lend to them. You're helping supply chain issues. You're getting the bulk of inventory. Maybe that business, although that business better be wary, are they going to have control? Are they going to only be on this aspect, on this platform to sell their products and services? So, they need to make sure to read every single bit of fine print that goes along with that. But, I think that could create a complete nightmare and unfair advantage for the other products.
There's a lot of negatives. Borrow. There's a lot of negatives that could come from that, for sure. On every side of it.
Yeah.
But it makes me wonder why they're doing it, because a shortage of supply, more money is not necessarily going to fix that unless the money goes to manufacturing more product that are short in supply. And so I don't know enough about it.
Right there on their site, you no longer need to choose between a term loan and a line of credit. Log in for details, benefits of Amazon lending, fast approval, flexibility, simple application, no lengthy paperwork required, free up cash flow, cover inventory costs, develop new products, and pay advertising and marketing expenses, manage inventory, bulk buy inventory, and stock up ahead. Yeah, it would be an easy application process because Amazon's already going to know a history of the sales of the product. So they're just going to run their analytics and say, okay, great, we'll lend $10,000. We know in the matter of the last 20 days, we'll get that $10,000 back in holdback reserve here. So, they'll have good analytics. So on their viewpoint, that is a quick application process. And it is, they've got insights that, a traditional bank wouldn't see. And so they would have a faster turnaround. So the appeal to a reseller on Amazon, I think, is huge. Mm-hmm. But then,
who's providing oversight? What?
Yes.
Yeah. To your point about what happens if they don't pay back the loan in time, is Amazon then going to suppress their listing?
Or not suppress it, throw it on top.
Right. So, yeah, either way.
So they get paid off quicker. Right. Yeah.
I think that business has that problem now. They operate in Amazon's ecosystem. You are beholden to all the things that they want to do at a whim, whether it's policy, regulated or not. So they already have that problem. If you try to sell toothbrush on Amazon as a toothbrush company, you got to play by their rules.
Yeah. So if you're actually borrowing from them, you better read the fine print.
Right.
Go through every single step. But
yeah. So but let's flip it. What if one of those businesses were to come to you and say, hey, we need money for marketing. We need money for inventory, whatever. We want to get a loan, right? Not that you are necessarily in that business, but let's play it out. Is it a risk? Is it too big of a risk for you to lend to a company like that, knowing that this is the environment they operate in?
Yeah, absolutely.
Because what happens
that is an added risk, but also too on their side, maybe you could look at their sales history, but then they have access of the sales, and then it goes to their account, and they choose from there where to use their cash flow. Mm-hmm. They could say, they could be like, okay, well, we do owe the bank money at this time, but we need to use it to pay.
It's not debited.
This, it's not automatically taken. Yeah. So, if you controlled it's the same thing as their merchant capture. If you're in control of their credit card receipts, if you're, every day they're averaging $1,000 of sales at their coffee shop, and you're loaning them, and you're also controlling that net revenue they're getting. And so instead of them netting out to less than 2% of $1,000 every day, you're taking an additional 10% to cover the loan costs until it gets paid off over the course of 90 days.
Yeah.
So, you have a little bit better protection. Mm-hmm. So, your scope of lending is smaller. You're not looking at everything else. There are other liabilities. And so it's really fun out because you can collect it faster and you have greater control. So they have much greater control. Every sale, they're just going to hold back their portion and give the rest.
Mm-hmm. Yeah, it's an interesting kind of case study to think through because of the ecosystem that is created by Amazon in its nature. It's a different way of doing business outside of the Amazon ecosystem, or even Walmart now, because Walmart does the same thing. But yeah, that's really interesting. Yeah. I think
I've known of hotels that you stay at hotels, you pay cash. Now, 99% of hotels is all credit card fees.
Yeah.
So whoever has their merchant gateway, that's an easy way that a lot of them have gotten cash flow right away. They take a loan. It's usually high dollar, and it's financing companies. It's typically factoring. So they may end up paying a yield industry, of 15%.
They're close to the data.
But it's, each day the financing company is taking a portion of the net sales from their credit card statements. So we do that. And so the only way for, that financing company to really get hurt is if they cut off that credit card machine. They bring in another company in to accept credit cards.
Right.
Are they violating? Then they're going to be like, oh shit, now we have to file against them.
But they could
breach of contract and go through this.
Yeah, but they could. They could bring in another company.
You'd have to do a lot of extra work.
Right. But they could switch. In this situation, you're stuck.
Yeah, where else are you going to go?
So that's the problem that I see. That's the problem that I would see as a investor or business owner in a business that sells through Amazon. Period. You have to really know the in-depth figure of how this works, how you actually know. I think about it the same way as Airbnb actually. As you look at investing in real estate, there are tons of people that it's contagion. I'm going to buy this property and it's going to be solely Airbnb. Well, right now that's working. But what happens in 6 months, in 6 years, when you can't rent that property out because that whole platform got shut down due to, local regulations in your area.
Cities changed their mind.
Well, you're beholden to that platform, and now people are not going to come stay at your home. Is that going to be a permanent residence? A permanent rental. Well, now it's going to be a different business you're in now. So you're getting in the business of Airbnb, and it works right now. So
just yesterday, and I think it was in Orange County, Florida, they're putting additional. They're proposing new ordinances to help out renters. And it's funny, the things that they had on there were
permanent rentals.
Yeah, or monthly rentals at apartment complexes.
Not the
and some of the things that they came up with is, you have to have notice of your landlord to enter your property. Well, that's already like state laws. Landlord has to give you 24-hour notice to come in. Maybe they're just changing an air filter or something to that effect. Yeah. But they already have to do that, or they have to give you time for a rate increase. Well, if you're a month-to-month contract, then that right there, they have the ability in 30 days to change your rent
to whatever that is.
Yeah. And that so a lot of these things are already built in, but the renters don't know. But it was almost the guys because they wanted to throw in that last thing that they wanted additional time, and a lot of their concerns, because there are bad landlords out there, they're at stake, but for the most part, it's still going to the consumers are not paying attention to what they're doing.
That's right.
And, there's already laws in place for a lot of protection, but they're just not following through and holding themselves accountable too.
And in this Amazon
and putting themselves in that
situation, the business that sells through Amazon is the consumer. They are the consumer of the product through Amazon being lent to. And they're beholden to that. They're beholden to the economical wave that Amazon as a company rides. So if Amazon as a company starts to diminish in one form or another, it's going to affect their business, even if people are still buying toilet paper next day.
Yeah.
Right. And so all these points are very valid. I think it's such an interesting case study, and will be interesting is at the end here is kind of put it out to everyone who's watching this episode in one form or another, LinkedIn or Spotify or wherever. In fact, on Spotify, there's a new feature. It's Q&A. And so it'd be cool if people are watching this on Spotify to put a question or maybe a comment in the Q&A section to say, what do you think about this? Like, this is an interesting case study. I can see this in, 4 or 5 years being in the business schools.
I want to know from banks and factoring companies, what do they think about Amazon lending to their sellers?
Yeah. Yeah.
And what benefits or possible.
And would you, as a bank, lend to one of these businesses that sell through Amazon? Just, top level, would you lend to them? Are you lending to them? But then now knowing that your competition is Amazon, would you lend to them?
Generally, banks would, but they're going to be looking at positive history of income over the last several years. A traditional bank is not going to go in there and just, okay, you've got a great idea. You've had 3 months of great sales. That would not be prudent for them to lend on that.
Right.
That's where Amazon, okay, great. Maybe their qualifications are only being on the platform for a year. Credit checks are not going to be as apparent to that. So, you could have the owner of that company have 10 failed customers, horrible credit. Traditional banks, I'm not going to touch this person with 10 pull, but now they finally hit their lick and they're selling like crazy on their product.
Right.
So then at that point,
and based on Amazon's sort of filter
and criteria, that may be great qualification for them. So, there are areas where you could see, but, is it going to benefit the overall? Is it going to benefit consumers? Is it going to benefit?
Yeah.
I don't know.